How's it going, everyone? This is Andre Williams, and we're going to be talking about ChargePoint CHPT. We know they just had their ticker symbol change not too long ago, but also a lot of people have been asking me, hey, should I be building out my position? How do you think about ChargePoint for the long term to have in your portfolio? So what we're going to be doing, we're going to be doing the technical analysis, and I'm actually going to be going over an article that supports my bullish thesis on ChargePoint. Despite the fact that it's been taking quite the beating as of late, I still see some value. So check out those videos, and then I'll give you guys my final thoughts afterwards. So now we're going to be doing a technical analysis for ChargePoint. This is one of the stocks that is great for long term, and it's been beaten up as of late, and I want to kind of give you guys an update. So as you can see here from the 5-day 5-minute, we definitely have some support in this 23 area, because considering how well it was able to actually bounce off these particular areas. But if we look at the clear support level going forward right now, it definitely looks like we have some support here at $23.50. We have broken through it, but it seems to be an area that holds fairly well. On Friday, as far as how well it did, it was down 2.04% on the day, and it ended up reaching highs of $24.56 and low of $23.43. So if we open up the chart just a little bit here, we definitely have to see ChargePoint getting past this resistance area here right at $23.71, which I think is crucial. We already saw also in after hours where it ended up finishing at $23.60. So seeing it get past this $23.70 area will show us a serious move to the upside, going to $23.80 and then visiting $23.90 and then getting back to $24. It wasn't that long ago that it was back at $24. I know they had earnings recently as well, so that's kind of contributed to some of the downturn that we're seeing, and as well as the market correction. I definitely want to show you guys next now is the 3-month 1-day chart for ChargePoint. So let's just kind of open it up so you guys can see it here. So you can see all the way back here in September, it's been on quite the run, and it's actually done a fairly good job actually riding on the 21-day EMA up until the 31st of December. Ended up breaking through it, but ended up coming right back up and hitting this resistance level here at $45.71. And we know this is actually a clear area, especially as you can see right here around this 46. And when it does break through, we can definitely see a move going towards $49 and making a move to $50. But another thing that we need to take in consideration, it also formed another resistance area here at 42, and we also have another one over here at 38. And then if we go down even further, we have a resistance area here, which is very clear here at the $34.96 area, and also a resistance area here right at $30. So these are key levels that ChargePoint needs to surpass. It actually has made contact touching the 200-day EMA as well, and this is what happened, especially with a lot of stocks that were pulling back at this time, and this was definitely a buying opportunity when you see it touch the 200-day here at $21.85. So right now it's right back towards going on a downtrend. I would say if it does end up touching the 200-day over here, that's definitely an area where you could be looked to be adding. Okay, as far as for a long-term position, or if you're looking to do a swing or a medium-term type of a trade. But for myself, I believe in ChargePoint for the long term because of the potential and the growth prospects that it presents in the future. So I want to see ChargePoint come back to reclaiming this 21-day EMA. That is very important because, as we can see from prior history, for the most part, it's done a fairly good job actually riding along that trend, and it's broken right through it. So it's very, very important to see it reclaim this area. But for now, take advantage of how heavily discounted it actually is. And like I said, if we're looking at this a year, 2 years from now, you will definitely end up making some good coin off this company. Okay, and that's what I wanted to kind of share with you guys. And also very quickly, just to take a look at where the RSI is. We already know that 30 is a buying opportunity. That means it is oversold. So just seeing this alone is something to take into consideration if you want to build out a position, or maybe you want to cost average down, maybe you're here in the high range and so forth. But hey, if you really want to look for a really good deal, look for it to touch the 200-day SMA right here at 21.85 and make sure you have a position there so you can take advantage of that dip. And of course, make sure you use the dollar cost averaging approach just in case, so you make sure that you're getting the best value and you're not going all in on a particular trade or on a particular investment. All right, so I wanted to go over this article with you guys that came out on March the 15th. So ChargePoint stock is bound to charge higher this year. Forecast beating revenue should help convince the skeptics about ChargePoint stock. So that's why we know that it's actually on a low right now. It's been beaten up a lot. It's at a serious discount, and this is part of the reasons why I'm still bullish on it, and this article does a great job actually summing up my stance. So let's get into it. It took a while, but it was worth the wait when special purpose acquisition company Switchback Energy Acquisition brought ChargePoint to the public for trading on March 1st. Since that day, there has been plenty to talk about when it comes to ChargePoint stock. For one thing, the stock's price action has been very interesting. More on that later. There's also the 1.9 trillion US stimulus bill to consider. While that bill didn't specify funds for charging stations in particular, there may be a reason to anticipate legislation supporting the build-out of charging infrastructure. Finally, there's a fiscal data report that should impress even the staunchest bears out there. So strap in and get ready to charge up your portfolio with major player in the electric vehicle charging port niche. Here's a closer look at why ChargePoint stock is worth considering. ChargePoint stock at a glance. Before there was ChargePoint, there was SBE stock. SBE traded close to the $10 level for a number of months in 2020. But then in mid-September, the bulls started to show signs of life. In October, they pushed the share price up to $14 area. That was already a sizable gain, but there was much more to come. Amazingly, the stock price ramped up to $35 in November and even touched the 52-week high of $49.48 on December 24th. Unfortunately, that turned out to be a short-term peak. By March 1st of this year, when the stock began trading at ChargePoint stock, the share price had declined to $30. And on the morning of March 15th, the stock was below $30. So if you've been hesitating to buy the shares, you may have a chance to start a position at a more favorable price point. An ambitious promise. As I alluded to earlier, the 1.9 trillion stimulus package doesn't appear to specifically allocate funding for charging ports. That might be disappointing for ChargePoint stockholders. Just keep in mind, however, that investing is a marathon, not a sprint. The US government could still push for green energy initiatives involving charging stations sometimes this year. Now that the Democratic Party has a nominal majority in both chambers of Congress, President Joe Biden has fairly clear pathway to pass renewable energy policies. In fact, Biden has promised to build 500,000 new charging plugs in the U.S. over the next decade. Economics consulting firm The Brattle Group projects that the number of electric vehicles in the U.S. could increase to 35 million by 2030. Moreover, the firm asserts that this would require more than 2 million public chargers. Therefore, Biden's promise of 500,000 new chargers might not be enough. Impressive revenue growth. Don't be surprised if Biden changes that number to something more ambitious at some point, which would of course be bullish for the charging port market and for ChargePoint stock. Yet, investors won't have to wait that long to see ChargePoint earning strong revenues. Indeed, the company recently released fiscal data that indicates that it's already posting strong revenue growth. As the company reports for the fiscal year that ended on January 31st, 2021, ChargePoint's revenues totaled $146.5 million. That's an improvement over the $144.5 million in revenues generated during the prior year period. Plus, it should only get better in the coming year. For fiscal 2022, ChargePoint expects revenues of $195 million to $205 million. That would be consistent with the company's previously published estimates and would also indicate 37% year-over-year growth at the midpoint. Moreover, ChargePoint is in a solid capital position as of February 26th. The cash on the company's balance sheet was $615 million. The takeaway. Today, ChargePoint stock is publicly available for trading, and ChargePoint remains a premier player in the charging infrastructure space. And if the share price has come down from its recent peak, that's an opportunity to start a position if you've been sitting on the sidelines. So again, this is part of the reasons why I'm still bullish on ChargePoint, especially as a long-term investment. So for my final thoughts on ChargePoint, I am still bullish on this company. They have a bright future ahead of them, especially since the focus is the adoption of EV vehicles and increasing ownership year over year. That is huge. We already know that the Biden administration is very, very big on clean energy overall in general, and he's made some serious commitments in regards to having more electric vehicles on the road. So taking that into consideration and also taking the discount that this stock is at right now, you really can't go wrong, especially if you're having a long-term outlook. One of the things to look out for, which we covered in the technical analysis portion, is to look out for any pullbacks. We might have some pullbacks this week. Like I was showing you, the stock is on a downward trend. So if you can end up getting it lower than the current support levels that we were talking about, then by all means start building out your position. And it's part of the reasons why you should have a dollar cost averaging approach. This can also help people who probably got in at a high price and you want to bring your costs down. If you're not aware of what that is, let's just say you have $1,000 and you want to put 1,000 on ChargePoint. Instead of making one full position and going all in, and then a pullback happens and then you're beating yourself up hoping that you should have gotten in at a cheaper price, instead break it up into increments. You take that 1,000 and say, well, you know what? I'm going to be purchasing ChargePoint on 4 dips, $250 a piece. This equals 1,000. Instead of putting 1,000 in right on that first dip and then ends up dipping again, right? So that's what I want you guys to really get in the habit of doing. I actually do that in the 5K challenge, and I feel like it's a smart thing to do so you don't end up having any FOMO, and it's just better for your overall investing habits in the long run. Hope you guys found this video helpful, and we'll talk soon.